listeners and viewers, welcome to Kaduna State Ministry of Education Radio and TV e-learning program designed for our SS3 and other students staying at home due to the coronavirus pandemic. The present administration, under the able leadership of His Excellency, Malam Nasir Ahmed El-Rufai, is positioned, as always, to ensure that under his leadership, our students are not left behind in all areas of human endeavors, especially education. Kaduna State is the center of learning. Therefore, we want to ensure that our students excel in their forthcoming examinations and beyond. Students and other learners at home are given this opportunity in order to continue learning, as education is a continuous process. Different subjects will be taught in this program to assist students to perform excellently in the forthcoming Senior School Certificate examination being conducted by NECO and WAEC as soon as schools reopen. Teachers making presentations will always provide their names and phone numbers during each presentation, and they can be contacted for questions, further explanations, and/or clarifications. The following numbers and contacts can also be reached for expression of any concern or observation: 090-865-00545 or 080-383-62072. Our website is www.education.kdsg.gov.ng. Our email, education@kdsg.gov.ng or education.kdsg@gmail.com. Our YouTube channel, Ministry of Education, Kaduna State. Our Twitter handle, @Kaduna_MOE. Or our Facebook page, Ministry of Education, Kaduna State. Stay safe, stay at home, and learn well. Thank you, happy listening, and happy viewing.
Good day, my dear students. I'm Abbas Shehu by name, your commerce teacher as usual. I'm here today to take you on the topic known as business, profits, and turnover. Under this topic, we intend to look at the following. One, we'll look at the meaning of profits, types of profits, trading, profit and loss account, uses of profit, factors affecting profit, meaning of turnover, meaning of rate of turnover, and the last, factors affecting turnover. Now, beginning with the first one, meaning and types of profit. What do you understand by profit? That's the question I want to ask you. We have been hearing profit every time, especially from our business men and women. What is profit? When we hear profit or say profit, what does it mean? Profit is the financial benefits which accrue to a business. It is a financial benefit which accrue to a business. In other words, it is the amount of money realized as a result of transacting a business. Amount of money realized as a result of what? Transacting a business, carrying out a business. We talk about business, we're talking about a term that is generally used referring to whatever you do legally in terms of buying and selling that brings you money. Now, the money you realize as a result of that business or transaction is what we refer to as profit. In a layman language, they call it gain. But it is not gain as far as commerce is concerned. It's not gain as far as you, as students of commerce, are concerned. It is or amount of money realized as a result of carrying out a business. Amount of money that accrued to a business as a result of buying and selling. And that's what we mean by profit. Now, having talked about what we mean by profit, we now go to talk about types of profit. There are two types of profit. Number one is known as gross profit. And the second one is known as net profit. Two types of profit. One, gross profit. Two, net profit. Now, what are they? Gross profit is the excess of turnover over the cost of goods sold. Excess of turnover over the cost of goods sold. It is the difference between the selling price of an item and cost of goods sold. What are we talking about? When you buy, for example, a piece of product at the rate of 10 naira, which is the cost price, and you sell it at the rate of 15 naira, in this simple example, we can say that you realize a profit of 5 naira. Your cost of goods sold is 10 naira. Your selling price is 15 naira. Now the difference between your cost of goods sold and the selling price is what we call gross profit. It's what you call gross profit. That's talking about the first one that we refer to as gross profit. Now let's go to the second type, which is known as net profit. Net profit is the excess of gross profit over expenses. It is usually arrived at after deducting all trade expenses from the gross profit. Simple. When we're talking about net profit, we're talking about deductions. We deduct trade expenses. In the example I gave you of gross profit, where we said you buy goods at the rate of 10 naira and sell at the rate of 15 naira, if you look at this transaction, there is nothing like what you call trade expenses. No any expenses is incurred in terms of transacting the business. But there are times when you buy and sell, you incur a lot of expenses. You incur a lot of expenses. For example, cost of transportation. It takes you, or you spend 10 naira in transporting yourself from where you are doing your business to where you go and buy what you are coming to sell. And you pay, for example, 2 naira. That is termed as transportation fare or transport fare, and it's considered as trade expenses. Or you are renting a house or shop where you do your business. At the end of the month or year, you pay rent to the landlord. That is called, you equally calculate that and add it. You calculate that and keep it aside. You take that away from your gross profit to arrive at your net profit. Or you advertise your goods, and in the cost of advertising, you pay. The cost of advertising is equally considered as trade expenses. They are all considered as trade expenses. The transportation you pay, advertising that you pay for, rents that you pay for, all these are considered as trade expenses. And if you want to know your actual profit, you need to add up the expenses and deduct the expenses from your gross profit. What you arrive at is known as net profit. Now, using the examples we gave initially of buying goods at the rate of 10 naira, selling the goods at the rate of 15 naira, where you incur expenses of 3 naira, by the time you deduct the 3 naira, or by the time you add the 3 naira to your 10 naira, which is the actual cost of goods, you will now arrive at 13 naira. If you remove 13 naira from 15 naira, you are left with 2 naira. The 2 naira you are left with at the end of deducting your expenses, your trade expenses, is what you call net profit. Let's talking about what we mean by gross profit and then net profit. Now, for us to understand what we are saying very well, for us to determine our gross profit in a business, as well as net profit in a business, we need to prepare an account. And this account is known as trading profit and loss account. two accounts joined together. Trading accounts standing separate, and then we have profit and loss accounts standing separate. By the time you join the two together, you have trading, profit and loss account. Now the first one, which is trading account, is the account that is used to determine gross profit. It is the type of account that we use in order to ascertain our gross profit. We only look for or find out our gross profit in trading account. Whereas in the profit and loss account, we determine our net profit. We determine our net profit. The other one, trading account, we ascertain gross profit. But in terms of profit and loss account, we determine net profit. Though, right from the beginning of this lesson, you heard me talking about profit, which is the motive of every business, or the motive of almost all businesses. That does not mean that the business cannot incur loss. There is what we call loss. But our concern today is talking about profit. We have what we call loss. We have what types of loss. Just like we have gross profit, we have gross loss. Just like we have net profit, we have net loss. But our concern today is not talking about loss. We are talking about profit. So in terms of trading account, we determine not only gross profit, but also gross loss. So also in trading and loss account, we determine not only profit, net profit, but also net loss. But like I said, we are not going to bother ourselves in terms of losses. We are only going to focus our attention on profit, which is the main aim of every business, which is what every business intends to achieve. Now, having talked about these two accounts, the trading account and the profit and loss account, now let's take a look at the first one, which is trading account, and see the items that are found under trading account. What are the items that are normally that are normally used in trading account? There are items like what you call opening stock. Opening stock. We have what is known as closing stock. We have purchases. We have carriage inwards. We have return. We have sales. Then we have return inwards. These are the items of trading account. Now let's go back to the first one, which is opening stock. Opening stock is the stock of goods available at the beginning of a business year, at the beginning of a financial business year. Stock available. We refer to them as opening stock. If, for example, you are dealing with cars, your business is dealing with cars, you are buying and selling cars. The total number of cars that are available within your business premises, within your business location, is what we refer to as stock. So you value the actual money for the whole cars, and you term it and give it the name opening stock. Then we have closing stock. This is the stock at the end of your financial year. The stock of goods or stock on unsold goods. In this case, we give you cars. If you are a car dealer and at the end of the financial year, you have 5 or 3 cars that are there unsold, you now get their value and put it as your what? Closing stock for the year. And when we're talking about here, we're talking about financial year, which is not the same as calendar year. Your financial year starts for any day. And by the time you have 365 days you have spent a year, and that will give you what you call your financial year. Now we go to the number 3, which you call purchases. Apart from opening stock, closing stock, you equally have item or purchases. Purchases. And what are purchases? They are the total amount of money you use in buying what you are selling. If you take the case of a car dealer, the cars he has been buying to sell, buying for resale, the total amount he spent in buying those cars is what we refer to as purchases for the year. Then we have what we call return inwards. Return inwards. Return inwards is the amount of goods, the value of goods returned to you. To you. After selling goods to Mr. A, B, or C, he may return some of the goods to you because of one reason or the other. Maybe because the goods you gave him are not the actual goods he is intending to buy from you. Maybe because the goods are damaged along transit. Because of one reason or the other, he takes back those goods to you. We call them return inward. Then we have return outward, which is the opposite of return inward. This is talking about where you are the one that is returning the goods from your different suppliers. You buy goods from them, and because of one reason or the other, you are what? You are taking the goods back to them for them to refund your money. We call that return outward. The other one is inward, when you sell. This one is outward, when you are the one that is buying. Then we have what you call carriage inwards, which is another item of trading account. This is talking about cost of transportation. You buy goods, the cost of carrying the goods to your place is called carriage inward, and is usually added to your purchases. Then the next one we have is what you call sales. Sales. The total amount of money you sell. The total value of goods you are able to sell within a particular given period of time. Within a particular financial year. The total sales, the total goods you are able to sell. When you add the total amount of money, you will arrive at your sales. This is normally arrived at by adding daily sales, weekly sales, monthly sales. By the time you add all the sales for the whole year, you arrive at your total sales. Then we go to the part that has to do with profit and loss account. Profit and loss account. Remember when I was talking about profit and loss account, I said it is used to determine gross and net profit. It is used to determine net profit, and net profit is determined through deducting expenses. So all expenses that will fall, that will be deducted after arriving at your gross profit, those items are under profit and loss account. Now, having talked about the items, it's good for us to have an example so that we can see how we work it out. We have an example here where we say the following information is extracted from the books of Jameson Yarrow and Co. Limited as at 31st December 2019. 1. Stock at 1st January 22,000. 2. Sales amounting to 46,000. Carriage inwards amounting to 8,500. Return inwards amounting to 500. Cash amounting to 600. Stock at 31st December amounting to 3,000. Wages and salaries amounting to 2,000. Expenses amounting to 500 naira only. Now, from this information, we are asked to prepare trading profits and loss account for the year. Now the first thing we do, we draw our T account. We draw our vertical and horizontal line. On the left-hand side, we have our debit side. On the right-hand side, we have our credit side. Now, on the debit side, the first item we enter there is opening stock. And our opening stock is 22,000 naira. We add purchases. And the amount of purchases is 8,500 naira. By the time you add the two together, you arrive at 30,500 naira. Now add carriage, which is 500 naira. You arrive at 31,000 naira. Minus closing stock, which is 4,000. You arrive at 27,000 naira. Now this 27,000 naira you arrive at is known as cost of goods sold. It's referred to as cost of goods sold. Now, having done that, you move to the credit side where you have your sales. You record your sales, and our sales for our information is 46,000 naira. You add it, you write it there. Now you less returns inward, which amounts to 600 naira only, and you will have 45,400 naira. Now you less your cost of goods sold. You less your cost of goods sold, which is 27,000 from 45,500. You have arrived at 18,400. Your 18,400 is now your gross profit carry down. You write that gross profit carry down on your left-hand side of the account or debit side of the account. Now, if you go to the credit side, you now write gross profit carry down. That particular 18,000 naira that you wrote there as your gross profit carry down is one that you will now bring here as you are brought down. Having done that, you are through with your trading account. Now the next thing you will do is you go further to do the profit and loss account, where you will list all the trade expenses and then total the expenses, deduct the total expenses from your gross profit. So we have expenses one as salaries and wages. Salaries and wages is 2,000. Expenses is 5,000. By the time you add this together, you will have 2,500. And by the time you less 2,500 from 18,400, your net profit will be 16,000. That will be your net profit. So your net profit carried down is going to be 18,000. By the time you add up the 22,500 with your net profit, you arrive at 18,400, which is your gross profit brought down, written on the credit side of your account. So you now come to say, you come to the credit side and write below the amount that you have already written as 18,400, you write below it. You write below it, net profit brought down 16,000. And that's how you just do your calculations. This is just a very simple trading profit and loss account. I'm sure for those of you that are in commerce class, you have been dealing with accounts where you treat this topic extensively. Here it is just a brush for you to remember how you arrive at your gross profit, how you arrive at your net profit. Now, having talked about or having worked out this example, the next thing we will quickly do or talk about is going to be uses of trading profit and loss account. One, they are used for planning purposes. Trading profit and loss account are used for planning purposes. You want to plan your business. By looking at your trading profit and loss account, at a glance, you'll be able to know how much money you are making, how much profit you are making in terms of gross or net. And that will help you to plan ahead, whether to look for more capital, to expand your business, whether to increase your increase your advertising, so on and so forth. So it helps businessmen to plan their businesses, looking at what they are making as profit. 2, they are also used for payment of corporate tax. Before you pay your corporate tax, you are expected to know how much are you making, because it is out of what you are making that you will be asked to pay tax, which is known as direct tax. 3, they show the profit or loss of a business at a glance. At a glance, you can be able to know. At a glance, you can know how much profit or loss is made. 4, which is the last one, they are also used in comparing the result of previous years. When you check profit and loss account of last year and of this year, you'll be able to know how you are faring, how good your business is doing. And the last thing we will talk, I think, is factors affecting profit of a business. Factors affecting profit of a business. What are those things that will affect the business, whether negatively or positively? Number 1 is the selling price of your goods. The selling price of your goods will affect your profit, because if the price is high, people will not be buying from you. But by the time the prices are low, they will buy. And the more they buy, the more you will sell. And the more you sell, the more profit you make. Number 2, cost of goods sold. Your cost of goods sold, if it is high, of course, your profit will be low. If it is low, your profit will be high. Then number 3, the number of competing firms. Where we have competing firms, it means that if you don't advertise your products, people will buy from them. And the more you advertise, the more you are spending money, and the less profits you will arrive at. Number 4, the relationship between demand and supply. When your goods are highly demanded, they will buy. People will buy more. But when it has less demand, people will buy less, and the less they buy, the less you get your profit. Then the last one is knowledge of the seller concerning the market. If you don't have knowledge if you are a seller, you should have knowledge of the market, so as for you to be able to know how you can go about strategizing your business, plans, so on and so forth. Our intention was to talk about turnover, but I think we'll have to stop here because of time. In our next class, we will go into the other part of our discussion, which is turnover. We'll see what we mean by turnover, what are the factors that affect turnover, so on and so forth. I remain your commerce teacher, Abbas Shehu, and my number is, as usual, 0801 00 127 508. My colleagues are 1 Zain Abdul Karim 080 3284 7167. Zain Abdul Karim 080 3284 47167. Mr. Yari Zakaria 080 6569 4134. Stay home, stay safe. Keep learning. Thank you very much until we meet in our next class.